The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we saw more good strength in soybeans on Thursday. Wheat markets under a little pressure. Corn felt like it was kind of stuck in the middle. Good day in cattle, too, on Thursday. Let's talk about it. Joining us now for market analysis, we welcome in Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to catch up with you here again this week. And I guess I will start our conversation this way. It started on Monday and then kind of faded, and then Thursday came back. It feels like some, and I'll reiterate, some weather risk here in this grain market has started to creep in and led to a little bit of short covering, particularly in soybeans. Would you agree?
I would agree. Now, yesterday's close was really disappointing. The market bounced right back today, so that's indicative, I think, of yesterday afternoon 6 to 10 day outlook, which again showed that below normal precipitation view moving more and more from the west to the east, and then again another confirmation with another stretch of above normal temperatures. So, starting to hear the term flash drought bantered about a little bit by some of our customers in the northwest region of Iowa, southeast South Dakota, southwest Minnesota, just areas that were wet, and all of a sudden the spigot kind of turned off. So starting to look at some drying conditions, and then you've got some pretty good percolating temperatures out west. And I don't know if those are going to make their way to the east. Triple digits out in parts of Montana here yesterday. And so you have some weather premium put back into the market or starting to creep back in. The 6 to 10 day forecast. And I hang my hat a lot on those in the summer. Probably the eastern corn belt still looks like normal to above normal in rainfall. So I like your words, weather market creeping back in.
Yeah, I think if anything, we talked last week and we kind of hit on really the last couple of weeks some of the tough conversations that folks have been having to have. They haven't liked these market prices, but then, here the last few sessions, maybe farmers have been given a little bit of an opportunity to catch up on sales. Sounds like maybe there's been some movement to commercials, some sales made by farmers this week. So maybe, I guess, this little rally has maybe been helpful to the farmer, Brian.
It has, and you're seeing some basis pushing corn to get some into the ethanol plants' hands or some of the feed mills. Not everywhere, but you're seeing some of that. But the board price, let's just put this in some kind of perspective. On September futures today closed at 406. And on June 28th, the market closed at 407.5. Now, June 28th was the acreage and stocks report that really rattled the markets. And so we're back at that closing price there. The WASDE report was out on the 12th. The USDA report was a little friendly for corn. The market did post a bullish key reversal. That's holding. So there's a little bit of technical activity there. Solid close in corn above the 21-day moving average today. Beans, impressive move, 15.5 higher in the November, closing right at or just above the 21-day moving average. So I like what I'm seeing there. No, there's a couple of things missing. One, wheat didn't participate today, and that's you want your engine firing all cylinders, and that's a cylinder that was not firing today. And then secondly, export sales today reminded us that we're not, surging in export sales. And it would be really nice to see end users come in hand over fist, and they're kind of not coming in at all. I mean, it's there and it's trickling, but we'd like to see that. So, if you could get sort of this triple trifecta where you'd get export sales increasing, a little bit more weather premium, and then across the board buying or short covering. I think we have some tepid buying. The bulls want to be bullish, if that makes sense, but they're not seeing a lot of emphasis to help support them other than the potential weather forecast.
Yeah, and that's a great point. It's, we wondered what it would take, what low price would it take to spur some demand. We did get a sale on a flash sale Thursday morning for soybeans that was fine, and it looked like new crop weekly numbers were good for beans or good-ish. Old crop was dismal, though. I
Hmm.
mean, to that point, the demand side of this equation, it's just not there, Brian, and that's a big concern I have here moving forward.
It is a big concern, and it's something new that we in kind of the northern hemisphere, or I should say the U.S., really hasn't had to grapple much with over the last 20, 25 years, where we've seen in a lot of years some really good kind of Far East buying as supplies of whatever supplies there are in South America sort of dwindle, and then they come in and buy us, and it looks like we're competitive on the corn market right now, but we're still not seeing any of those big daily flash sales. It's just not happening. Really disappointing there. Now, to the end user's point, why? I mean, the market has been trending down for nearly 2 years. The rallies have failed consistently, so they've been trained or taught to be patient. U.S. farmers excellent at producing. Weather seems to come in just in the nick of time to save crops, et cetera, et cetera. That that might be a what I'd call a security blanket that's pretty thin, but to the point of being patient, that has worked. I think what we're seeing in the marketplace is we're probably seeing the funds who are very short, not only this year, as short as they were back in February, but if you look at, let's say, the last 5 years of managed money, they're just way underneath other years at this time, way underneath. So they're putting their neck out kind of far at this point. So there's a lot of big bears out there saying, well, this is a problem. Right now, the market's got a footing, but it doesn't have enough of a catalyst to keep it going unless it comes in the form of additional weather forecasts. Then all bets are off.
Yeah, that's a good point. It's felt like a giant game of chicken in this grain market. I've used that term a few times here as of late, just with the fund position and commercials and farmers kind of stuck in between here, looking for something to try and rally us. On the wheat market, pressure there. We're continuing to find good spring wheat yields on this week's Wheat Quality Council tour of the Dakotas. I think that coupled with just all this cheap Russian wheat out there, despite some of the weather risk that could be there for spring wheat and canola, and then some of the Black Sea issues, I think despite that, you're just seeing that kind of override things here towards the end of the week, Brian.
Well, you sure did today, and it's disappointing that we can't kind of find a couple of good, big, solid days back to back. So I look where wheat prices closed today. It's not terrible on the charts. It's not great. The 10-day moving average for what that's worth. So it's the average price on futures over the last 10 days. I just happen to be looking, let's say, at the D Chicago contract. And we've been through that average in each of the last 5 sessions. In each of the last 5 sessions, we close at or underneath it. So we're not getting that good into the close buying that you'd like to see. And that's probably just indicative of harvest pressure, the wheat tour, as you indicated, showing some pretty good stuff. It's impressive. And the weather, that wet weather in spring and early summer, farmers got their spring wheat in. It looks pretty good at this point. Hearing very, very little from our farmer customers about yield problems or quality problems. So that's an issue. That isn't much of a problem this year. So it's a blanket. I'm going to say kind of a wet blanket over the market. Still, wheat's a cheap commodity, but probably not cheap enough to compete with Russia right now.
Yeah, very true. Well, of course, the US dollar is part of that equation for exports. Those macro markets, I know, got some positive economic data out Thursday morning with durable goods orders and things like that. The Dow rallied some. So, I mean, that macro picture too, we always kind of look at that, Brian, and see how that plays into the grain and livestock markets. And it's been a choppy week, maybe to some degree in the macro side, but still finding some supportive economic news there on Thursday.
Correct. And right. So I think you know, the whole world, I'm going to say, was kind of prepared to see something that we saw today in the economic news, and it's kind of a head scratch here. Well, now what's going to happen to interest rates, and
Yeah.
so it kind of throws a little bit of a kink in it. But when you look around the world and you see where China lowered interest rates, you see that Europe's lowering Canada's lowering interest rates. It seems to me that maybe in an odd way, confidence into the U.S. has come in, maybe further investments. But I'll tell you, I still get concerned on the whole demand side of things, and maybe I'm focused too much on the negative. But when John Deere's laying off quite a few people, Mercury Marine in my home state laying off a lot of people, that's just not a few isolated. There's more than that. The consumer has really gotten pinched in this environment of inflation and higher expenses across the board, and not necessarily higher incomes, or for farmers higher value for their product, obviously not in the grains. Cattle doing okay, but there again, our worry is you got a nice bull market, but it just can't seem to get much better than where it is right now.
That's a great point, and that's a good thing to think about. Just with the overall economic picture, you get some supportive-ish news, but still, that overall picture, just I'm still cautious, I guess the best way I would put it. We're talking with Brian Doherty for Total Farm Marketing here today, and let's go to livestock. You mentioned cattle, and good up day in both fats and feeders, picking up some cash
Yeah.
trade on Thursday. That's a market that has been fairly solid, but also it's felt like it's starting to get back towards its top again. Your thoughts in that cattle trade overall, Brian?
Yeah, so I use the charts a lot to help me get a picture, right? And where have we been and where are we going? And we've really kind of flared out for some time on let's say, the fall month and futures. So let's kind of just start with the August contract first in the live cattle. New contract highs today, impressive and encouraging, above the Bollinger Band. Strong pickup here in the last 5 sessions. The market on the board has rallied from just in a consolidation window around 182 and a half to now over 188, almost to 189. So good reflection of the board catching up to cash. We said we were concerned a week ago that, hey, we're not seeing that happen. Does that mean cash is coming down? Not so quick, right? And then maybe some of these forecasted temperatures might have a little bit to do with that, because typically weight gain is challenging. Some better economic data probably adding a little cream to the top of the cattle market today. So bull spreading has been the feature in the live cattle market, and we've seen strength across the board. But what we're not really seeing in those deferred months is any real participation. So we got August pushing new highs, but I look at February, nice close today, right, up over $1. But February is at the same point that it was back in March. And in fact, it's been lower, then it rallied back, but it's spent a lot of time right around here. So again, can't get those deferred months to really push higher. And that to me is problematic if you're thinking that you want to replace cattle with feeders. The feeders are not offering much of an opportunity to at least feel confident in profits on the back end. So something eventually has to give there a little bit. Feeders did close up today 50 to 120, but there too, a lot of money to put out for feeders and a lot of stagnant activity in that feeder complex, both in the futures and cash right now. So in summary, the strengths in the front months, we've got maybe some demand surge here, maybe some prospects that the board was just too cautious and now moving up toward cash. But boy, proof is in the pudding. We need to see cash hold here at the end of July, early August. Otherwise, I think cash is poised to see a bit of a setback.
Hog market has had a nice rally after 10, I think, straight consecutive sessions higher. We closed a little mixed on Thursday, so maybe take it a pause. But that hog market has definitely done a good job rallying after getting beat down, Brian.
Yeah, classic V bottom, and this is not unusual in hogs. Feeder cattle can do that too. Not so much live cattle, but some markets have what they kind of carve out a bottom. Corn's notorious for sort of a saucer bottom where the market goes down, then sideways, and then up. When you have such a steep sell-off in the hog complex, and now you got a steep rally back, it's pretty impressive. And to just kind of give an example, October hogs recently $68 in about mid-July. July 11th, and here we are, July 24th, and we're pushing the 70, almost the $79 barrier. So big $10 rally in that market. Maybe a little bit of a pause today. No technical damage done. We were higher today, finished off some, but not anything that would have me alarmed, other than maybe alert it that the market is up against. And again, I like to use that technical indicator, the Bollinger Band, up against the top Bollinger Band or the upper Bollinger Band. So wouldn't be shocked if we saw some hedge pressure come here. But I'll tell you, the August contract at over 93, and then you've got February, you've got December, you've got October as you bring these months. They're all well underneath that. Plenty of room to move up yet. Looks like it still has momentum. I'd look to target. I know I'm a little aggressive here, but October hogs to move back up to that $82 area. That's where the 100 and 200-day moving average exists.
How about the dairy market, Brian? Any notes for us over there this week?
Yeah, so we had a milk production report this week that had a favorable tone to it. Per cow production down, production off a little bit. No, what I was concerned about is we might see kind of a bigger increase. I want to be bullish milk for a lot of reasons. The problem I have is I don't recall historically if we ever seen such a divergence where you've got grain prices going south and milk prices going up. Eventually, those cheaper grain prices attract more milk production. So I'm a little bit concerned with that. A little bit concerned too that sticky inflation, that consumer dollar can't be stretched as far. So the milk market has a really firm undertone. New contract highs established in a lot of contracts here recently. Not the front months, but if you get back into October, November, December, those contracts have had a really good run. Got a solid cheese market right now, but we don't have what I'd call an explosive cheese market where prices are just really rocketing. You got a 197 on the barrels, 193 in the blocks. Solid, but not extravagant. Butter prices have been in a steady climb all season. They're trading near their highs, so good demand on that front. Exports have picked up here recently. So you've got a well-supported market right now. I just don't know if you have a market that can really add anything special. I hope I'm wrong, but I just don't see the formula right there. I see herds expanding. I just don't see a formula for it.
Brian, great thoughts as always. Anything final you want to share or reiterate with folks here today?
Well, the market volatility sticks around, and so we're still in a weather market with grains. I would watch that very carefully, especially from an end user perspective. I think you kind of got your gift early this year, and that is if you were thinking that, well, where can the market get down to? Maybe $4 on the board in December corn, 11 or 10.50 in November beans. They got there. So watch these meal markets, watch this corn market very carefully. Look for those opportunities. The other thing I'm going to leave you with too, something like natural gas. If you're a user of natural gas, that's been on the decline and becoming a very attractive price again, both in the immediate term and long term. So look at those markets. Just stay edgy, stay alert to things here, and we'll see if weather has more impact or not.
Brian, if folks want to reach out and have a conversation about their marketing plan with you there at Total Farm Marketing, how can they get in touch with you?
Well, I'd ask them to give me a call, 800-334-9779. So I'd start with that. And then I would ask that if they, want to shoot me an email, use Brian with a Y at totalfarmmarketing.com and shoot me an email, or check out our website, totalfarmmarketing.com.
Brian Doherty with Total Farm Marketing. It's always good to catch up with you, sir. Thanks for joining us again this week. We'll talk to you again next week.
Yes, sir. My pleasure, Jesse. Thank you.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.